banks have been profiting from the higher interest rates, which obviously are going down now. Is that something you would say is a threat to the bank's profitability here in your area?
Yeah, I mean, on the first part, clearly that we've seen. So we've seen that the return on equity of banks has close to being doubled from low interest rates to now this higher interest rate environment. What the market analysts are saying, so we are not doing forecasts of bank profitability and net interest margins, is that the net interest margins will stay higher than they've been in the low interest rate environment. So we need to see how this is evolving. We, of course, working very closely with the banks so that they have sustainable business models, that they're resilient to exogenous shocks, that they have good IT infrastructures in place, because I think this is really the key for also their ability to compete successfully in the future.
Another topic, of course, are also the quality of the loan book, so non-performing loans. They're still quite low, despite the macroeconomic headwinds. So what's your outlook for NPLs and also the macroeconomic effects on the banks?
Yeah, no, as you've said, I mean, non-performing loans are at a historically low level for the banking union. So this is clearly also one of the big successes of the past 10 years. But we are seeing slight signs of deterioration related to commercial real estate, related to SME lending, so lending to small and mid-sized enterprises, and also in the countries that previously did not have high non-performing loans. So this is something we monitor very carefully, in particular because corporate insolvencies have been increasing. As we all know, corporate insolvencies actually went down during the pandemic, even though we had a big recession. So this has been an unusual pattern, and we monitor very closely how the banks are addressing potential deterioration in asset portfolios. We've done targeted reviews to make sure that the banks have good risk management, credit risk management systems in place.
Do you also, in that respect, look at what a potential tariff increase triggered by the Trump administration would do to the banks?
Well, this could definitely be a scenario that the banks have to consider, but we are not doing the scenario analysis for the banks. So we look at whether, when assessing geopolitical risks in their credit risk management, whether the banks consider relevant adverse scenarios, but we are not the ones designing the scenarios for the banks, because they know much better how their corporate customers would be exposed.
Cybersecurity, though, is a risk which has been on the rise. We can tie it to the war in the Ukraine, but we can also tie it to overall development. So do you think the bank systems have improved in that respect?
Well, we've actually done a cyber resilience stress test this year, which was asking whether banks, given that they're affected by a hypothetical successful cyber attack, how they would respond to such an attack. And we found that the banks are quite prepared, so I think this is a risk that banks do have on their radar. But we also found that there are still deficiencies, and now we're working with the banks also in this supervisory review and evaluation process to make sure that these deficiencies are being remediated.
One big topic, of course, I know you probably can't comment on individual banks, but just the general idea of cross-border takeovers in the euro area. Is that something you would rather ban or support?
Well, as I said, or as you said, I can't comment on individual cases. I think our role is very clear. So we take a neutral approach as to domestic mergers, cross-border mergers. We have a very clear criteria given to us by the legislation in terms of looking at prudential ratios, the financial soundness of acquirers, the impact on the potential combined entities. So we're clearly looking at this. I mean, from an economic point of view, mergers, be they domestic or cross-border, are clearly a response of banks to a changing competitive environment. And we are not against them, but we also, of course, we see the benefits, but we also have to consider potential risks, because this is our role. But the decisions need to be taken by the banks themselves.
Yeah, but in general, consolidation also inside the euro area, inside Europe, is something which is probably wanted, right?
Sure. I mean, sustainable integration is clearly something that is beneficial also for financial stability. So you have more risk diversification. I mean, there are lots of benefits, but we also know that there can be risk associated with managing a larger entity. So we need to take need to take both of these factors into account.